Does it seem that right now the housing market is almost a tale of two different worlds? You've got some sellers that are still pricing their homes like it's the red hot market of 2021, while buyers, on the other hand, seem to think that the crash of 2008 is about to repeat itself in the months ahead. And from everything that I'm looking at and what I'm seeing, both are actually wrong. That's the disconnect, and it's causing a lot of missed opportunities. So over the next few minutes, I want to show you exactly what's happening, both nationally and here in Frisco. So if you're in the market, you can buy or sell without leaving money on the table. And if you've been following any of my other videos, especially the ones about quick move-in homes, then you're going to want to hear this update because many of the best deals are getting snapped up. And the builders are already starting not only to shorten the time that incentives are available, but pull back on those incentives as well. So without any further ado, let's dive right in. Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas, and welcome to your August 2025 real estate market update. And as mentioned, I'm going to start this update by taking a look at a couple of the big national trends that are driving buyer and seller decisions. Then we're going to dive right into what's happening here in Frisco, Texas. And you're going to see that not everything you've been seeing and or hearing and or expecting is what we're actually experiencing. And I'll close out today by wrapping this all up and what it actually means for you if you're in the market to buy or sell. So with that, I'm going to share my screen and we're going to jump straight into what is front and center on most people's minds, and that's mortgage rates. All right, so this first graph that we're looking at here is showing mortgage rates all the way back to January of 2022. And you can see, and we all know, they took a rapid rise up, and we saw as a result, buyer activity and sales absolutely plummet. They reached a peak right here in November of 2023. They edged down, but the most important thing to notice on here is if we look that since November of 2024 through now, they've actually been a lot less volatile. They've been hanging out between 6.5% and 7%. And I know that might not be ideal. It's not the ideal rate, but the fact that they have been a lot more stable has encouraged a whole lot more buyers and sellers to come back into the market. And for those of you that are sitting on the sidelines expecting rates to come plummeting down in the next few months, then I've got some bad news for you. Here's the latest forecast from Fannie Mae, the Mortgage Bankers Association, and Wells Fargo. And you can see here's where we are right now. And this is going all the way out until the fourth quarter of 2026. So the end of 2026. And they're basically projecting rates between 6% and 6.6%. So basically somewhere between 6 and 6.5%. So if you're hoping that during that time rates are going to end up at 4.5 or 5%, could it happen? Anything can happen. We've already seen that. But right now, there's nothing that is being projected. And I know the Fed is forecast to cut rates here fairly soon. But remember, the Fed cutting the federal funds rate doesn't directly impact mortgage rates. Mortgage rates are closely tied to the Treasury bill, the 10-year Treasury bill. So if you want to get an idea on where mortgage rates are heading, then the 10-year Treasury bill is what you want to keep an eye on. Now, here's what Sam Kater, he's the chief economist at Freddie Mac, had to say. He goes, mortgage rates have moved within a narrow range for the past few months. And that rate stability, along with improving inventory and slower home price growth, are an encouraging combination. Now, as I mentioned right at the beginning, we do kind of have a tale of two different markets right now. And those markets are to do with the difference between supply and demand, basically driven by supply. Let me show you what I'm talking about. All right, this is a quote from Realtor.com, and as they say, the South and the West continue to see the greatest inventory gains and the sharpest market slowdowns with longer time on market and more frequent price cuts, while the Northeast and the Midwest remain relatively tighter by comparison, but are also gradually moving towards more buyer-friendly conditions than in recent years. So here's what I mean. And I know this is going to be a little bit harder to see, and it's not letting me increase it much, but the lighter blue colors here represent states that are still running below pre-pandemic levels in terms of inventory. And inventory is basically just supply. It's the number of homes for sale. Now, nationally, as shown right here, when we go back to pre-pandemic and now, we're still down 13.4% overall in supply. You look here in the Northeast, you can't see this. Vermont is down 54%. You've got New Jersey down 60%. Washington, D.C. down 81% from where they were pre-pandemic. Why is that important? Well, pricing is controlled by supply and demand. So in these markets, there's very little supply relative to demand. And believe it or not, they're all seeing multiple offers. This is the market that we saw here in Frisco a couple of years ago. A home goes on the market, boom, there's all kinds of offers, and it sells very, very quickly. Now, the states with the darker shading of blue, those are states that have seen a rapid rise in inventory, and those are the ones that have seen market softening take place. I'm just going to point out Texas right here in case you can't read that. It's showing here that on average in Texas, inventory is up 32.1% compared to pre-pandemic. Do me a favor, file that away. Remember that. We're going to come back to that percentage in just a minute. Now, overall, this is where the dynamics have shifted as it directly impacts pricing. So in the Northeast, you've got about 88,000 active buyers and 71,000 active sellers. So again, sellers are in control here. There's an inventory shortage. You move into the Midwest and there's only slightly more buyers than sellers. So that market's becoming fairly balanced. But the South, which is where Texas is, you have 177,000 buyers against 293,000 sellers. Again, that is showing you that demand is not there relative to supply. So the dynamics have shifted in favor of buyers. And then we look out west, that market is also adjusting. You have 189,000 sellers as opposed to 121,000 buyers. So you're seeing a slowdown in activity in those markets out west as well. So now that we've taken a look at some of those national trends, let's take a look at what's going on right here in Frisco. And if you've, again, seen my videos before, you will know all real estate is absolutely local. So what you see, in the paper or online, or what you hear on the news may not be what's happening in your specific community. There's differences between what they say is happening throughout Dallas, Fort Worth, Arlington, which is the main metro area they capture, and right here in Frisco. Let me show you. All right, this first graph that we're looking at right now is taken directly from our local multiple listing service. And this is looking at inventory of homes for sale in Frisco. Now go back just a minute. When we looked at Texas, what did it say was happening? It said on average in Texas, inventory compared to pre-pandemic was 32.1% higher, right? So let's take a look at what's going on here in Frisco. So here we are right now. So we had 1,062 homes for sale in July. So let's go back. So in June of 2019, pre-pandemic, 1,032. So we're up 30 units, right? And then if we go back into 2018, 1,063. So basically the exact same as what we've got right now. So again, Texas is showing 32.1% more inventory than we had pre-pandemic, which is the measure they're going by a lot as a idea of returning to a normal market. But here in Frisco, we haven't seen that. So if you consider how many more homes there are in Frisco now compared to 6 and 7 years ago, but the number for sale is still right on par with where we were pre-pandemic. So we've gotten back to pre-pandemic levels, but we certainly are not running way above them like some of the markets in Texas, like Austin, are, as an example. So that is why you haven't seen massive drops in prices. Yes, we've seen price reductions. Yes, there's been better deals in Frisco, but this is why you aren't seeing the bottom fall out of the market by any means. With that in mind, let's take a look at sales prices. So again, this is a 10-year trend line. So this is there. I can shorten this out, make it look a little bit better. So this is looking at Frisco right now. So you can see for the month of July, we're actually up 1.4% year over year. You may remember if you saw my June market report, we were down slightly year over year. These numbers are going to change month over month. But the important thing to note here is if you go back, our pricing has stayed relatively stable. Yes, it bounces up and down each and every month, depending on the mix of homes that was sold that much. But overall, closed sales prices are not moving a whole lot in terms of that median. Now, if I jump into my other report, so again, if any of you are watching this from not in Frisco, this report right here is key. Right? You can get this exact same information for any city or zip code in the entire country. I've got a link to it in the description below, and it's going to allow you to track the data specific to your market. I'm going to show you exactly what we're seeing. So this down here is looking at list prices. Again, yes, some of the prices are being listed higher than they should be, but I want you to look at how stable this has been. Look at this trend line. It's not moving much at all, right? So back here in October, the 7-day median was 739, the 90-day median 750. And look at where we are right now. 7-day median 754, 90-day median 768. So we're not seeing a run up in prices. We're also not seeing them drop off substantially right now either. Now, this is one section I don't often go into in these reports, but I just think it's worth pointing a couple things out. On this is market segments. So what in the world is a market segment? This is basically taking a look at the overall Frisco market and dividing it into 4 equal quadrants, sections, if you like. Okay, so our lowest segment of our market has a median price around 470. These are the stats of the home. And then the next up, you've got roughly 660, right around 3,000 square feet. 868 marks the next segment at about 3,700 square foot homes. And then 4,400 square feet. And the next segment has a median price of about 1.3 million. And there's differences in all of these markets, but there's a consistency I want you to see here. In the lowest segment, 20 homes were listed, 27 were absorbed. What's absorbed mean? Sold. 16 were listed in the next segment, 25 were sold. 15 were listed in this segment, 31 were sold. 14 were listed in this section, or in this segment rather, and 17 were sold. You can see more homes are selling currently than new listings coming to the market. So again, what do we need for prices to change drastically? You need a big run up in supply, and then you need to see buyer activity drop off. Buyer activity is not dropping off right now. As a matter of fact, it's starting to pick up. Mortgage applications this past week were up 18% year over year. What does that mean? Well, mortgage applications are a leading indicator of future sales activity. People don't often apply for a mortgage if they don't plan on buying a home. So you quite often see that show up in sales data about 90 days out. And that is why when you come back up here and I just show you inventory here in Frisco, you're going to see, has it climbed? Yeah, it really has climbed. Okay, but look right here, June 13th. Between June 13th and now, this is pretty flat. So it's showing our inventory for the year has peaked and we are now flattening out. And I would not be surprised to see this start to trend down in the next 30 to 60 days. You might notice the number here shows 735. From that report I just showed a moment ago, it showed 1,062. This is looking at single family homes only. So that's why there's a little bit of a difference, whereas the other one was all listings. It was combined. So inventory appears to have peaked for the year. And then last up, I'm going to show you right here. The other one I always like to keep an eye on is properties with a price decrease. This shows what percentage of homes up for sale are having to take a price cut before going under contract. So right here, we're up at about 57%. But again, if you look at this dashed line, which is the 7-day trend line, as opposed to the solid line, which is a 90-day trend line, it's starting to flatten out and turn, which is pretty typical of what we've seen in other years as well. Now, I know stats and graphs and charts and data are definitely not the most exciting thing. They're not as nice as going out and looking at beautiful model homes or things like that. But I think it's really important to get you this information so that you can actually see what's happening here in the market and why some of the headlines may not be lining up exactly with what you may be experiencing when you go and visit builder communities or when you go and tour homes. So if you're thinking about making a move, this local data happens. And those national headlines don't tell the Frisco story. And this market rewards people that understand the numbers. To be honest, I have been able to negotiate some phenomenal deals for buyers just recently due to the fact of I know the numbers and I know where it's trending. So whether you're planning on buying or selling, remember, I do offer a free 30-minute consultation. Think of it like a discovery call, just to kind of go through what it is that you're looking for, share more insights into the local market so that you'll be able to make the best decision for you and your family. You can go ahead and scan this QR code to be taken directly to my calendar, and there is also a link in the description below. Now, as I mentioned earlier, if you've been watching any of my quick move-in videos, you're going to know that there have been some absolutely incredible deals out there lately. Massive discounts, generous builder incentives, especially on move-in ready homes. But here's what I'm seeing, especially after visiting communities the past few weeks. The best of those deals have been snapped up. You know, the savvy buyers have been out there not waiting, and they've been coming in and picking up what is left. And the builders are already starting to scale back on their offers. Does that mean they don't exist? No, it doesn't. But you're not seeing them quite the way you were to the same degree as we were just a few months ago. So again, if you've been waiting for the perfect time, it may actually be behind us. All right. So, but there are a few deals left on different communities, different homes, and I invite you to reach out and I'll be happy to share those with you. So the bottom line, what does all of this mean? Well, for you out there, if you're planning on selling, you got to remember this isn't 2021. And looking at sales data from 6 months ago, it's worthless. It's irrelevant. You've got to pay attention to what's going on right now. It's really a tale of diamonds or deals. That's what's out there, and that's what's moving. What is exactly a diamond? Those are the homes that are in perfect condition. They've been completely updated, completely remodeled. If you have a pool, that's almost a slam dunk. A completely remodeled, updated home with a pool, those are selling quickly for the highest possible price. But if your home, let's say it's in good shape, right? But there's a few updates it needs, or there's a few repairs that it needs, buyers are going to want a deal. You're not going to get top dollar for that home right now. I'm not saying you got to fire sale it by any means, but you've got to realize you're not going to be able to command top dollar. But for buyers, it's not 2008. The sky is not falling. Everyone's got a different opinion, and that's fine. And do I know exactly what's going to happen? No, I don't. But I'm putting my experience right here on camera for you and sharing what I'm seeing here in the market and what the data is telling me. Prices are definitely not crashing right now. They've stabilized and they're actually up a little bit year over year. And it could mean if you're on the sidelines, it could be missing out on the best inventory and the best incentives. But that's not to say if you're not ready, you should jump right in. So again, who you're working with matters. So if you'd like to talk through those options, don't forget, go ahead and schedule that 30-minute free consultation. Again, scan that QR code or you can go ahead and call the number that has been up on your screen, and I'd be more than happy to talk it through with you and make sure that your next move is a smart one. So thanks so much for watching today, and I will see you in the next video.